Thank you for staying with us on the AM show. And at this juncture, we talk about Ghana's economic performance, aka one of the main parameters we use, the gross domestic product. Now, we're looking at it for this first quarter and what the dynamics are compared with the same time last year. Don't you forget that, the Bretton Woods institutions and other institutions have projected that things on the back of COVID and more were going to be difficult. Now, we have the Russo-Ukrainian war. But how have we fared? Well, let's paint a picture of that before we have our conversation with our guests. Joining me in the studio, Isaac Kofi Ajay. Ike, a very good morning to you.
Good morning, Ben.
Okay, so let's quickly do this. We're looking at our GDP. What are the dynamics we're going to be contemplating this morning?
All right, sure. So first, let's look at the first quarter GDP for 2022, which is 3.3% growth rate from the first quarter of last year. So this simply means that if you compare GDP this period, that's from January to March this year to that of last year, our GDP has grown by 3.3% in terms of comparative analysis if you compare these 2 years. Now,
so there's a growth on the back of last year's.
Yeah,
right.
So about 3.3%. Now, this is a sectoral breakdown of the 3.3% that we are talking about. So the agri sector is leading in the first quarter of 2022 with a growth rate of 5.6%, followed by the services sector with a growth rate of 3.7%, and the last being the industry sector growing by 1.3%. If you compare this, you realize that the agri sector and the services sector all have growth rates above the average 3.3% that we talk about. It is only the industry sector that grew by 1.3%, which is below the 3.3, average GDP that we spoke about earlier. Now, let's look at the drivers of this GDP that we are talking about. So there were three key drivers of the 3.3 growth that we saw in the first quarter of 2022. First being information and communication, one of the big drivers of this 3.3 growth that we are seeing. The second is crops, and the third being transport and storage. So in spite of fuel prices and other things going up, we are seeing transport sector being one of the lead drivers of the 3.3 growth rate that we saw in the first quarter.
And I am thinking when we look at crops, of course, we'll have those cash crops as well,
absolutely,
like cocoa and others. It interests me, though, how we're faring when it comes to oil palm. I think that's one area we should look at. The other day I was talking about Malaysia and what they've done with oil palm.
Yeah.
It would be interesting to know, because I hear a lot of them now are, seeding for the production of rubber trees. Others are selling their lands off for galamsey and all of that. It will be interesting to know what impact we're making there. But interesting dynamics.
Yeah, let's an interesting figure to see that, the agri sector has picked up in terms of growth rates. Now, there were also some main subsectors which recorded growth rates above 10%. So, the headline growth rate was 3.3%, but there were other subsectors which recorded growth rates above 10%. So, the first being what we spoke about, information and communication, growing at 26.6% if you compare the first quarter of 2022 to the first quarter of 2021. The growth rate for information and communication is 26.6%, followed by fishing, which grew at 26.1%, water supply and sewage growing by 25.4%, electricity growing by 15.9% in the first quarter of 2022. Now, apart from this subsectors growing, there were some other subsectors, 7 of them which contracted. The first being professional administration and support services, contracting, meaning that there was a decline by 12.8% in the first quarter of 2022. Public administration, defense, and social security declining by a negative 9.8%. So it dropped by 9.8%. Real estate had a decline of 2.6%. Construction also declined by 2%. Health and social work, 1%. We have forestry and logging also declining by minus 0.1% in the first quarter of 2022. Now, Ben, I want us to do some trend analysis here So I looked at all first quarter growth rates for the economy from 2014 to 2022 this year. And I wanted us to see how our economy grew in the first quarter. So we start with 2014. The first quarter of 2014, we had Ghana's economy contracting by 1.1%. That was a decline in 2014. Then fast forward in 2015, the first quarter of 2015, we saw a very significant increase from a contraction of 1.1% to a growth rate of 10.8% in the first quarter of 2015. Then in the first quarter of 2016, just a year after we had recorded a 10.8%, a massive decline from 10.8% to 0.4% in the first quarter of 2016 when we were about to go into the elections. And in 2017, first quarter, right after the election, we saw an increase from a contraction of -4% to 7.6% in the first quarter of 2017. It continued in the first quarter of 2018 to 10.8, being the highest in this period that we are actually considering. Then since 2018 first quarter, the first quarter GDP growth rate for Ghana has seen a consistent decline from 10.9 in 2018 to 5.9 in 2019, then to 6.4 in 2020, and 3.6 in 2021. Then the current one we're talking about right now, 3.3% in the first quarter of this year. So you can see.
So we saw a rise in 2017. In 2018, our highest figure as of this period.
Absolutely.
And since then, it's been a spiral. What accounts for that, though?
Well, what we can actually look at is pre-COVID and post-COVID probably. So if you look at during the COVID era, we recorded our first case of COVID-19 somewhere in March. So it means that then we should be getting ready to report our first quarter GDP figures, and the economy grew at 6.4. But if you compare 6.4 to the previous one, that was 2019, there was actually an increase when we entered the COVID zone from a 5.9% in 2019 to 6.4% just when we entered COVID. That should tell you that there was some sort of increase from 5.9 to 6.4. Then right after COVID, we've seen a massive decline from the 6.4 we had in the first quarter of 2020 to 3.6% in 2021, and the current 3.3% in 2022 first quarter. But previously, we've had high numbers. We've also had some contractions in 2011, 2016, and some of the high numbers we've had were in 2015, the first quarter of 2015, and 2018. So some sort of a cyclical movement when we talk about the first quarter growth rate of Ghana's GDP, Ben.
Well, Isaac Kofi Adjei there, walking us through the analysis when it comes to our first quarter GDP as of this year. Thank you so much, Isaac. Now, let's get on to our guests. Professor John Gachi is Dean of the UCC School of Business. We also have economist at the University of Ghana Business School, Dr. Patrick Esuming. Gentlemen, a very good morning to you. I'll start with you, Dr. Esuming. Looking at the latest figures, is it any comfort, anything to celebrate as far as our first quarter GDP is concerned? We've seen a steady decline over the last 3 or so years, but year on year, we've made progress.
First of all, let me say good morning to you and good morning to viewers. It's great to be back here. So, well, I think it is not really great news. I think it just shows that from where we ended last year, it looked like the rate of economic activity has slowed down a little bit. So even last year, when we had the economy grew at 5.4%, I think the 5.4, even though it was higher than some people estimated or projected, we have to understand that it's still lower than what we were doing pre-COVID. So even though the economy was showing signs of recovery, the number that we've seen for the for the first quarter of this year simply tells us that there's been some weakening. So it is not good comfort at all. It means that the momentum that the economy seemed to be gathering, we seem to see that momentum has halted a little bit.
You say it is no comfort, but at least it's better than some projections ahead of this quarter that we saw, especially while we still grapple with COVID, and now we have to deal with the war between Russia and Ukraine. So is it that it's not what we would have expected, or is it that it is a bad performance?
I think if you look since the COVID, the middle quarters of 2020, when we saw some contraction, we've seen an increment in the growth rate in the last 5 quarters, consecutive quarters. This is the first quarter in 6 quarters that we've seen that the growth rate has been lower. So from that sense, if you look at the momentum we seem to be gathering from in the post-COVID era, since 2020, this is definitely a setback. If you look at the quarter by quarter numbers, this is the first time where we have seen a reduction in the growth rate from the previous quarter in the last 6 quarters or so. So in that sense, we cannot celebrate. And I think you always have to start from the point that even though we seem to be making progress, we still were not back to, even at the end of last year, we are still not back to where we were before the COVID. So let's get it clear. Yes,
but Doc, we still are in the throes of COVID-19. We still are in the throes of COVID-19. Recently, our numbers have gone up again. So would it be fair to say that, or to expect that would get to pre-COVID-19 levels, especially when we're still in the midst of COVID?
Well, you have to understand that we were still in the midst of COVID when in first quarter of 2021, we had a higher growth rate than what we are having. And, in that period, there were still more restrictions on economic activity than we have now. As at this period that we are talking about, almost all the COVID restrictions had been removed. So you expect that, we will see a much better performance than the period. So you are right that the COVID hasn't completely gone away. But even in the period where we didn't have vaccines and there were still restrictions on economic activity, you saw that the growth was much stronger than we had this year. That's the context in which we have to understand that this is a weakening.
But when you look at the projections from the World Bank, they did project that agriculture, services, and industry would, spur on our economy in 2020. At least when you look at the figures, the facts and the figures, and you look at agriculture, which contributed in this first quarter 5.6%. You look at services 3.7% and industry 1.3%. A bit of a low there. Is that at least a pointer to the fact that at the end of the year, we could get the 5% plus as projected by the World Bank? I
think the 5% is still achievable. We might probably exceed it. But that is
so it's actually 5.5%. That is the projection. 5.5%.
We might still exceed the 5.5%. So, but I think you have to look beyond just the headline numbers, and you see the number of subsectors that saw a decline in this period. It's quite alarming. I think if you compare quarter by quarter, that's why if you break down the numbers and you look quarter by quarter, the number of quarters that contracted in the previous, the number of subsectors that contracted in the previous quarter, there were only about 3 or so. Now we've had about 7 or 8 subsectors contracting. And that's, for me, that is not a good indication. Even though we've seen some sectors grow very, very strongly, but we shouldn't allow that headline number to hide the fact that we've had in the services sector alone, we have 5 subsectors seeing a contraction. In the industry sector, we've seen construction seeing a contraction. That hasn't happened in a while. So I think that is the sense in which it should be of concern. So usually the headline number looks great, but we always have to dig deeper into the numbers and see, where we are headed. And clearly, if you compare this release to the previous one, there's no doubt that there's an indication that some sectors are weakening.
Right. Let's look at the sectoral, contributions and the changes, and let's just get into them and give me your outlook on them, because we know that in this instance, the main drivers of our economy in the first quarter were information and communications, that is ICT, crops, cash crops, and then transport and storage, interestingly. And when you look at the breakdown, you would see that information and communication contributed at 26.6%, fishing 26.1%, water supply, sewage, waste management and remediation activities 25.4%, electricity 15.9%. But there were also laggers, those that were a drain on our economy. 7 sub-sectors which contracted: professional, administrative and support services by over 12%, public administration and defense by over 9%, real estate, construction, education, health and social work, forestry and logging, all of them contracted. What picture really does this paint? So the laggards vis-a-vis information and communication, crops and transport and storage.
Yeah, so if you look at those, in particular the services sector, that the subsectors that have seen contraction, it's an indication that the problems with public finances, with government finances in the first quarter may have played a role, because you see that these are sectors that are primarily dominated by the public sector. Look at public administration, defense and social services, even construction. The government is a big source of construction activity in this country. Look at education. The government is a big driver. Look at health and social work. So you notice that after the budget was read, the finance ministry came out and said they are going to do a cut, a 20% cut. And when they announced that, some of us challenged that if the cut actually happens, it's actually going to cut capital expenditures. It's going to cut the things that will actually spare our long-term growth. So you do see a sense of that in the data we are seeing, in the sense that the sectors that are primarily dominated by the government are the ones that are seeing substantial contraction. If you look at the ICT, which are seeing substantial growth, if you look at the fishing sector that are seeing substantial growth, all of those have very little government participation. So it just tells you that the actions that we took in order to face government finances, to help us to help government balance its books, it seems to be biting.
Let me bring in Professor Gachi, Dean of the School of Business at the University of Cape Coast. Prof, a very good morning to you. Thank you for joining the conversation. Hello, Prof.
Yeah, good morning.
Good morning, Prof. It's a pleasure having you. Let's take a quick look at these latest statistics from the Ghana Statistical Service vis-a-vis what projections the World Bank had made. They had said that in the medium term, the economy was going to see a bit of a boost, projecting a growth of 5.5%, on average 5.3%. When you look at this surge, so to speak, quarter on quarter, 2021-2022 of 3.3%, is it indicative of that growth that was projected?
I think, first of all, we need to put into historical perspective that all the average expected growth of the country, even in difficult times, we were able to surpass that. It is also possible that the conservative expectation of growth put forward by the World Bank may as well be surpassed, perhaps at the end of the year. I think the growth should be looked at from the annual point of view. One doesn't know what will be the next quarter's growth. Perhaps that will be able to accommodate the lower performance we're talking about, so that at the end of the year, we may achieve or we may not. Of course, it remains a projection. Many factors will have to play for those projections to come true. All that I think we should be doing is to look at the areas that we are not doing well, from the fiscal service point of view, and try to address those that we can address within the year to propel growth in the next quarters.
Let me just permit me to just interject here, because there are 7 core areas that contracted, which are the areas where we are not faring so well. I'd like to find out from you which ones, like you're saying, we should tackle immediately. We have the professional, administrative and support services, which shrunk by almost 13%, minus 12.8%. Public administration, defense and social security, interesting there, social security, minus 9.8%. Real estate has taken a hit on the back of COVID and all of that, minus 2.6%. Construction, minus 2.6% as well. Education, interestingly, minus 2.0%. Health, social work, minus 1%. Forestry and logging, minus 0.1%. When you look at this list of 7, which areas do you feel in the immediate term we should be looking at?
Well, if you look at construction is an area that will ensure some cross-growth development in the economy, and that is negative. And that tells you that if you don't address that area, you will not achieve the level of growth that you expect. Again, if you look at most of the activities there, if government performance is negative, that will also fuel into some activities of the private sector, and that ought to be fixed. Because if the government delivery of services, who does the government deliver those services to? The public, the private sector. And if that is so weak, I believe it will have dire consequences for efficient delivery that will contribute to growth of the economy by the private sector. That ought to be tackled. Then again, education. What is the issue? That education is now negative. Education is huge. If you look at it, the education economy alone is so huge. So if that is performing negatively, if I'm a policymaker, if I am part of the administration, I should be tackling that seriously.
Okay, so that definitely would be an area to look at. But I want you to look at, having seen the dynamics, you would realize that from the first quarter in 2021, in fact, the first quarter in 2020, we're looking at a growth rate of about 6.4, or we're looking at a level of 6.4%. In 2021, 3.6, and now in 2022, 3.3%. The trajectory has been falling over the years since 2018, even pre-COVID. What do you think explains that?
Well, I think that gives opportunity to the managers of the economy to know why, even just after COVID, we seem to perform quarter-on-quarter basis better than when we are moving far away from COVID. I think that is what the managers of the economy are supposed to do, to be able to fuel growth in those areas.
Let's take a look at what more of what the World Bank has been saying. But in 2022, we had our own projections in terms of stabilizing the economy, in terms of consolidating the economy. And we were looking at raising revenue from 16% to about 20% year on year. So in this year, we're looking at increasing revenue generation by about 4%. And we also had in there the e-levy. At the same time, we're going to also minimize fiscal wastage by quite a large percentage ahead of 2024. Those projections, are they realistic now, or should we throw them out of the window on the back of what growth we're seeing, and on the back of the fact that the e-levy has its own problems? I don't know whether you've heard, but that latest release or survey by Imani Africa points to the fact that there is such a huge decline in terms of transactions, in terms of people using mobile money in a way that will generate taxes. What's your take?
I think the reason why we are concerned about the lower growth rate is because of two important things. One, we expect that if growth is inclusive and managed very well, that growth should contribute to revenue generation. That is one of the expectations. growth is not for nothing because it has implication for other fundamentals like revenue mobilization, employment generation or employment. So if our growth is going down, then we are concerned that these important fundamentals that we aspire to achieve, we may not achieve them and to have dire consequences on us. So I think we should rather be concerned that these developments are taking place. That tells us that many of the problems that we have, and we think that they are anchored on robust growth, we will not get to that point. And that is the risk that lower growth rate pose to the economy. It's also going to ensure lower revenue generation. When you match it against your ability to pay your interest on debt and all those things, you will have much problem. When you talk about new opportunities that are created by this growth, you will find it difficult to account for that. And for that matter, you will find it difficult to account for expansion of businesses. You will find it difficult to account for new employment as a result of expansion or as a result of new opportunity. So I think we should rather be concerned and try to revise the environment within which we have put those projections. Because if the environment is wrong like we are seeing now, we may not achieve whatever we have put forward to achieve. E-levy, yes, we all know that the performance is not as good as expected, but this is the time that I think the Bank of Ghana should release the first 2 months or so of implementation of e-levy. What is the percentage of performance? Whether we are below target by 50%, by 30%. Some people are talking about performance of just about 10% of the e-levy.
I mean, Imani Africa says it's declined by what, some 83%. That is huge.
Yeah, that is Imani. But Bank of Ghana is the institution that should tell us that this is the performance of e-levy. Imani has done a good job, but we want that to be authenticated by the Bank of Ghana.
Dr. Suming, is that a call you support as far as revenue generation is concerned? Because once you are caught in what, I mean, globally, we're caught in battling COVID-19, battling what is happening between Russia and Ukraine. Governments, economies across the globe are getting battered. And this is one of the main measures, tax or revenue generation. How much of a concern is it for you, this entire e-levy dynamic, before I go back to our fiscal deficit?
Well, I think as far as the e-levy is concerned, before they put it in place, many economists, myself included, had warned that the government is not going to raise as much as it was projected. So, the government seemed to estimate that, the reaction, the public reaction to the tax will be minimal. But we will find out, I'm sure, in the mid-year budget, when the expected next month, when the finance ministry comes up, we will see exactly where we are. So, but the e-levy is not, let's not forget, the e-levy is not the only thing that we put in place to help us to expand the revenue envelope. The question is, what have we done with the other measures? The finance minister said, as recently as March, that we are going to do the exemptions bill so that we cut the bleeding of public finances through exemptions. And then he also said, we are going to reform property taxes. So all of those, we expect that all those measures will help. Even with that, if all of those come on board, and yet the growth rate of the economy is slowing down, well, that might still affect the overall revenue that we raise. But let's not gloss over this. We need fiscal reforms. We need to make changes in how we collect revenues. And so far, the finance ministry has been dilly-dallying, and we haven't made the progress that we need to make. When the economy grows...
What makes you say the finance ministry has been dilly-dallying? I mean, it's announced what you've been talking about, the property issues and all of that. How is the finance ministry dilly-dallying?
Well, it's dilly-dallying in the sense that this year is not the first time those items have appeared in the budget. read the previous budget, you see that it's always been there. You will reintroduce the exemptions bill. It has appeared over the last 3 budgets or so. So, I mean, that is the sense. If you keep saying, and if you go further back, these were things that were discussed when we were under the previous IMF program, that these are areas that we need to check to bring in more revenues, and we haven't done it. So that's the sense in which I would say they are dilly-dallying. And even the other measures, look at one of the key things that the finance ministry projected was to raise more revenue by removing the benchmark values. And we also saw that it's been dilly-dallying, and up to this point, the benchmark values have not been completely removed.
True.
So there's been a lot of feet dragging by the government. It will announce these are the measures we are going to take. And then when it comes to the actual performance, it seems to be dragging its feet.
In terms of the fiscal deficit, of which you spoke a short while ago, we had a projection. 2021, we were looking at 12%. We had a projection that by the end of the tenure of this administration, 2024, we'll bring it down to 4.5%. Looking at the latest figures we are talking about, deliberating upon, does it paint a picture that we can get there?
I think it's hard to get a gauge on that. I think my preliminary reaction would be that at the moment, it doesn't seem like we will get there. Because if you take the target for this year, when the budget was announced, it was expected that sometime by March, the e-levy would have been in place. And when the budget was announced, we were supposed to roll back the benchmark values. If you check the amount of trade taxes that the government was projecting to collect between 2021 and 2022 was about a 50% increment. That part is not going to happen. We are going to see losses from the e-levy. And whatever the government meant to collect from, additional revenues they meant to collect from, the other measures, it doesn't appear that they are going to be realized. So if you put all of this together, and the fact that, it's only the first quarter, but the growth is not as strong as we expect it to be, there's a real chance that we will miss the target. From the outset, many people observed that those targets were too ambitious anyway. And I don't think, we will see. Let's give the government the benefit of the doubt. But if by the end of this year, all the measures that we said we are going to put in place, for which we projected a steep increase in the revenue for the year, if the finance ministry continues on the path that we are on, I don't think we will meet those targets.
You don't think we'll meet those targets? Let me go to Professor Gachi on this one. Now, even as we talk about all of these, there is an outstanding issue that we can never leave out. It has to do with our cedi and its performance. That also will affect business and the economy. We look at 2019, where the cedi lost value by about 3-point-something%. Then in 2019, 10+%. In 2022, within this period, we've lost over 20%. How does that affect the various dynamics in terms of meeting our fiscal deficit, in terms of meeting our GDP projections, in terms of stabilizing our economy?
Well, I think let me look at the depreciation from cost perspective. You know that the depreciation will actually influence the cost structure of businesses and even consumption of people. And that put pressure on us, and that contribute to inflation one way or the other. The fiscals are also not helping. Therefore, that collaborative policy framework that should deal with the economic difficulties that we have is not present. So we will continue to see the effect of depreciation, escalating costs, and translating into prices. So that is the situation we find ourselves now. When you go to the fiscal side, most of the things are not meant to be achieved. They were meant to project a certain signal for our creditors to indicate that we have a good move. Because if you look at our revenue performance, for the past 3 years, the revenue performance that we see show a downward performance of about 20%. That is to say that if you project 100.5 billion Ghana cedis, you are likely to perform below the expectation by about 20%. So that should indicate to the policymakers or those in finance ministry in indicating the level of revenue that we are supposed to generate. So in the first place, the revenue, in my opinion, were not meant to achieve. When you go to the cut in expenditure and all those things, what the government is doing is just because the government doesn't have money to spend. And those cuts that they talk about did not reflect in other numbers. For example, if you cut the general expenditure by 20%, and we do know that there is an alignment between the amount of debt that you acquire in a particular fiscal year is related to the gap, that is the deficit. But if you look at the data we want to acquire within the year, we have not slashed it down to align with the new fiscal deficit. So it is just a statement. They were not actually meant to reflect in the books, and they did not reflect in the books. And other watchers of the economy have come to that conclusion, and that is not good for the government. Now, when you go to areas like property tax is also not meant by politicians to be collected. And they just dressing the books to indicate that we know the sources of revenue, because there is political undertone to some of these things. The very people who own huge property, they are the same people who are contributing to party finances and the rest. And when they mention these figures out, they go back to their drawing room. They are not encouraged to implement some of these things. So anti-political expediency, we also look at issues of party finances. Some of these taxes will not come on board as expected. In fact, even if it will come on board, they will just target the low-hanging fruit, like some people who manage to pull some property, they will be targeting those ones, and they may not go to real areas where property taxes could be collected in huge sums.
Let me come to Dr. Esumeh. Dr. Esumeh, would you like to take the same point on the bit of our CD and its free fall and how this could impact our expectations ahead of 2022's end, that is the last quarter?
So now the CD depreciation, in addition to the problems it gives to private businesses in terms of projection and cost, at the macro level, we have to understand that usually we are going to compute our debt to GDP ratio, by converting our foreign debt to cedis using the CD, the exchange rate. So every time the CD depreciates, then the CD value of our foreign debt is going to go up, even if we haven't done additional borrowing. And that automatically make our debt to GDP ratio lose bigger. So I think, and when we are looking at what investors are concerned about the sustainability of the debt, even though the debt to GDP ratio, in my view, is not the most accurate measure of sustainability of the debt, it's still commonly watched. And then, it's a headline number that many people will watch it and say, well, this country's debt position is worsening. And that will also affect, the attractiveness of the Ghanaian economy and our ability to, seek external funding especially from the private capital market. But, I think ultimately, the CD's problems is going to be resolved in the long term. It's not going to be resolved today. All the measures that we take to manage they are all short-term measures. And at the moment, I haven't seen any concrete plan to address the currency's depreciating, the currency's depreciation. So it appears that from that angle, the uncertainty that businesses are facing, the instability that it is causing, as well as the potential influence on our debt indicators are going to worsen.
When you look at it comparatively, I mean, look at the Ivory Coast, for example. They've had a very robust economic development in 2022. I mean, comparatively. We know that even giant Nigeria has had its own woes. But when you look at a more realistic picture, Ghana and the Ivory Coast, and you look at what our performance is in 2022's first quarter and what the projections are versus that of the Ivory Coast, for example, what do you see? Are we faring well in the sub-region, basically, in terms of economic management?
Okay, so to be honest, I haven't seen what the growth rate for Ivory Coast is for the first quarter, and then our immediate neighbors. I think that, you know, sometimes the comparison is not extremely helpful. You know, if you take,
you think the comparison is not extremely helpful?
Sorry?
You think the comparison is not helpful?
See, if an economy has been growing at 10% all this while, and suddenly, you know, you are comparing your 8% growth with somebody who is used to growing at 7% and saying that you are doing better, that's absolutely not too helpful. You have to look at the growth number. What is it telling us? What can we learn? Where are the weaknesses that we need to strengthen? And then kick on. It's always good to see what others are doing. Sometimes we do that to say what is happening is a global picture. It's not only Ghana, but you know we just don't have to do the comparison for comparison's sake. We need to know if there's anything they are doing differently that we want to do. Sometimes you see, if you look at how Ivory Coast run their finances, you know they really don't have an independent monetary policy the way we do because they belong to a currency union. So some of those comparisons get to be muddied. We need to look at, you know, what if we are comparing to know what we can learn to improve our system, that's fine. But we should also study our numbers and see what are the numbers telling us, what are the weaknesses, and what can we do to improve.
So the Ivory Coast's growth within this sector has been, or within this segment, this first quarter has been 6.3%. They've had a positive, minimum positive variance of around $35.3 million. But the 6%, mind you, 6.3% is not very different from what they recorded last year in the first quarter. What would the dynamic be, or what would you pinpoint there if I asked you then about their figure? So you're looking at 6.3%, and it's not much of a change from what they looked at in the previous quarter last year.
So, first of all, we need to understand what is maybe take a longer term view. Is it an economy that typically does well in the first quarter compared to the other quarters? And then look at, you know, what exactly, what structural changes are happening within the economy that might be boosting their long-term growth. In our case, we clearly see that the reduction in the growth rate is coming from several sectors, and that is a source of worry. If it is one particular sector that is COVID prone or is especially exposed to what is happening in Russia and Ukraine, and that is what is driving that weakness, then you see. But I think generally when you just look at the broad number and say, oh, they have been able to match their last year number, and then we have seen the reduction.
So it's actually, I don't think pardon me, it's actually an expansion of 6.3%.
Well, that's I guess that's good for them. I think I started by telling you that the 3.3 growth is a slowdown and points to weaknesses in the economy. So I think even if we didn't compare ourselves to the Ivorians and we looked at our own path and our trend, we will still come to the same conclusion. I think it just doesn't make us look great when they are doing that. But, you know, we have to understand that the structures may not exactly be the same. And the impact of the external forces on the various economies may not be the same. So sometimes that's as far as we can take the comparison.
I'll put same to you as we get ready to wrap the conversation. I would have us wrap the conversation briefly on something to do with Russia. But for you, Professor Gachi, again, when it comes to that comparison, is it relevant looking at other countries in the sub-region, like I've cited with the Ivory Coast? And what, if any, lessons can we glean from our neighbors?
Well, I think comparisons are relevant, but there are limitations. They are relevant to the extent that we want to look at what policy frameworks they are implementing in the core areas of their economy, and that also resonate with our economy. And then we can learn what they are doing differently and try to catch up. That is the extent. But the structure of the economies are quite different in terms of control, in terms of how they even get to the capital market, etc. As my colleague said already, people don't believe that most of the Francophone economies within West Africa are independent. They are actually linked to the development in France and the rest, and it's tried to mute their numbers in terms of performance. So their numbers relatively look better than us. Even some time ago, we were comparing the rate we get in the capital market, and other factors in their favor will always make the rate that they get in the capital market better than ours. So we need to compare, because we are all almost agrarian economies. We are competing on the front of production of coffee, cocoa, and the rest. We can learn as to how they are managing those sectors, how they are managing their agri sectors, in terms of the number they're turning out in their agri sector, so that we can mimic some of these policies to promote agriculture in our country. But we shouldn't forget that their linkage with France has a huge influence on their economic numbers as opposed to ours.
All right. I have this final bit to cap off the conversation, because what is happening between Russia and Ukraine definitely impacts the rest of the world to varying degrees. But how interesting is it, and what picture could this paint for, the engagement between Russia and Ukraine moving forward, when Russia, for the first time, is non-performing or defaulting on its sovereign debt in foreign currency? I'm talking about the American greenback, for the first time since 1918, about $100 million. Now, some are saying this has been artificially created by a country that ordinarily would have the means, because we know they are still getting in a lot of money from China, which is still buying their oil at a heavily discounted rate, and South Africa that is now contemplating doing so. But what does this mean for the general economy of Russia, and how could this affect the rest of the world? In this instance, Africa and Ghana. I'll start with you, Prof, before I wrap with Dr. Isumi.
Well, that's relevant. If you look at the pronouncement of the Western leaders, they seem to be targeting the economy of Russia by their measures that they are taking against Russia. So it seems one way or the other, in some areas of the economic life of Russia, they are not perturbed, but in some other areas, they are being affected. But in any war, there are people who will take the booty. There are people who will benefit. Definitely some countries, including Russia, is benefiting one way or the other. Some people even describe Russia, the war being financed by European countries. They are financing Russia indirectly because of the oil and the rest. That would definitely translate into pricing of the most important commodity like oil and the rest, and some agricultural commodities and inputs. But I think what we should learn is to check our policies that we have been running over years. If we were to take different policy on certain items, in fact, you need to compare this with the data churned out by the Statistical Service, disaggregating for us to see where the problem area is. Definitely, you will come to the conclusion that the problem areas were areas that we have policy lapse, in the sense that we have not taken aggressive policy to concentrate on those things for the development of our country. This is the time that we should go back, begin to have robust policy in those areas, so that anytime some of these things happen, the shock may come, but the shock may be moderated. I believe that is what we should be doing now as a country.
Thank you so much for those summary comments, Professor Gachi, of course, Dean of the University of Cape Coast Business School. Let me hear from Dr. Esuming as well.
Yes, so I think I will speak of where my colleague left off. I think obviously all of these are designed to put more pressure on Russia to, take steps to end the war. Now, I mean, when the conflict comes to an end, the earlier the conflict comes to an end, the better for the entire world economy, including ours. But I think the lessons from this, it appears that the main lessons from COVID were lost on us. And the lessons from this might also be lost on us. What these two episodes have shown is how vulnerable our economy is and how exposed our economy is to external shocks, and how important it is for us to restructure our economy and to build a more resilient economy, so that every time we don't have a case where every time one country is feeling itchy and then having all manner of problems, it's directly transmitted to us. So having an economy that is extremely import dependent, in particular things that can be produced locally. I think the COVID-19 and the Russia-Ukraine crisis has shown us that this is not going to be sustainable. And the earlier we take measures to properly restructure the economy and stop doing lip service, the better it will be for us.
Interesting points you make at the end. And thank you so much, gentlemen, for joining the conversation. That was Dr. Patrick Esuming as well, economist with the University of Ghana Business School. Earlier, we heard from Professor John Gachi, Dean of the University of Cape Coast Business School.